Global Equity Index is brought to you by VTB Capital. Think global. Think VTB Capital.
Welcome back to Countdown. I'm Barton. Time in London, 6:23. Our next guest says anything other than a triumph for Angela Merkel would be a surprise in this weekend's Bavarian elections. And of course, she or her sister party did win. The CSU, which is the sister party to Merkel's CDU, did take this absolute majority. With more on this and the big news today that Larry Summers has removed himself to be the next Federal Reserve Chairman, or at least to be candidate for the next Federal Reserve Chairman, is Devon King Portfolio Manager Yannick Naud. Yannick, thank you very much for joining us today.
Thank you.
Before we dig into the German election, to look back over the Bavarian result this weekend, the big news, of course, is Larry Summers removing his candidacy to be the next Fed Chairman. I mean, you're a bond man, essentially, and it seems as if Bill Gross has said today that one should be buying the short end of the curve as a result of this news. Do you concur with this?
I think it's a good news for the bond market. I mean, both the short hand and the long hand. And I think we will see when the US are opening that the bond yield will go down on the news, because Mr. Summers was seen as being more hawkish than Madame Yellen, and therefore creating a bit more certainty about what we'll be doing in terms of the tapering and so on.
So for bond investors, Yellen is the sort of preferable pick. Is Yellen now the front runner?
I think so. I mean, it seems that way, and I think you have to welcome a world where there will be Christine Lagarde at the IMF, Angela Merkel in Germany, in Europe, and potentially a female leader of the Federal Reserve. I think, yes, there's much less uncertainty because, she's been involved in the current policy, and therefore it's probably we're moving away from those people with very large ego like Larry Summers to people a bit more pragmatic, a bit more accessible, and a bit more, let's say, predictable.
Yeah, and it leads us to the Fed meeting, of course, this week, Yana, when many of the economists we've surveyed, a majority say the Fed will begin to taper its bond purchases. Do you agree with that?
Yes, but the process might be a bit slower than what we expected so far. I mean, we have seen a big move in 10-year yield in States. I mean, we are around 3% or above 3%. It might be the time where we will pause and not go directly to 3.5 or 4%.
How soon before the 10-year yield reaches sort of 3.5 and 4?
Well, I mean, you have to expect the 10-year yield both in UK and in States to go eventually to 4%, because anyway, it's not a very high long-term interest, but it means that probably the economy will be a bit better and equity market will be a bit higher.
And as soon as the Fed starts to taper, if it is this week, Yannick, is the next debate, when are they going to start to raise rates? Are we then looking forward to the middle of next year when the projections are that the Fed will finish its bond tapering program?
Yes, I think the timing is probably correct. Nevertheless, the anticipation of increased interest rate will mean that the 10-year yield and the 5-year yield will go up almost immediately. We will not wait for the first change of short-term interest
Yannick, we're going to leave it there. You'll be back with us in just a second. Yannick Naud there from Devon King. More from Yannick in just a second. Stay with us.